All right, Slim, go ahead.
This is Market Week Live, April 26, 2024. Information and support for traders and investors. Welcome to all of you. We have a lot of people coming into the room right now, so really happy to see all of the interest that we have in there. Of course, we have many people out there that are watching on YouTube right now also. This is just the legal stuff that says that anything that we do is, whether it be oral, written, or in videos, however we could possibly present anything to you, is meant to be for education and analytical purposes only. We always encourage you to consult with your investment advisor and, of course, your own trading plan. The hosts today are a fantastic team, all four of us experts in cycle analysis. I've been around for 50 years. May 20th will be my 50-year anniversary as a trader. Matt Serpe, been with me for a couple of decades, Arby for like 15 years, and Katie Anagostos, our newest analyst that are here, but certainly just as qualified and our expert in option trading. So you've seen all the great work we've done, this team, and you can learn about us if you go to the AskSlim.com About Ask Slim tab and meet the team, and you can watch the interviews that we put up there, and you'll learn a lot about us. Contact information, well, if you're a member already, if there are membership issues or website issues, you could send those to team@askslim.com. Any questions on all of our content, education, analysis, first-time specials, upgrades, you can write to Matt@askslim.com, and he does a great job in helping you understand what is in all of our really vast membership levels that we have. Today, I'm going to bring you my opening comments on the market, and then all of our hosts are going to bring trade planning with the Ask Slim team, where everybody shares their analysis on some idea, shows you the trade idea, and you're going to learn our total approach to trade planning. Matt is going to bring his review of the services. You'll see the amazing depth of our content and services, and we'll be bringing you what is the final weekend coming up here of our cycle analysis workshop. Our express round with the whole team, all level 1 to 4 members that are in the room right now can ask questions, and you can be putting the questions up right now in the Q&A, whether it be about services, trade planning, chart analysis, trading issues, whatever it may be. We'll do our best to answer those for you. And then I'm going to bring you my stock market analysis. We'll take a deep dive looking at the S&P 500 and NASDAQ in multiple time frames. And we're going to look at the MCM. And you're going to see our market condition monitor at work. This is a level 3 and 4 asset that we have, and you're just going to absolutely be amazed at what that is. So be sure that you stick around for all of that. How to watch the show? Well, premium members, you get a link sent to you to participate in the room that right now, and free people, non-members, you're watching it right now on YouTube, but please do become a level 1 member or higher, and you'll be able to come in and ask questions. And our channel is Ask Slim Team on YouTube. Those of you that are new, get acquainted. You can just go to AskSlim.com, sign up for level 1. This is 3 months for just $45. You're going to get our information and analysis on the stock market every single day in our SIR snapshot. Matt does an amazing job with that. And you'll get other things in level 1 that are fantastic. So this is a good chance to really learn the way we approach the markets. On YouTube, subscribe to our channel, click that notification bell, and like the video. Give it a thumbs up. And on X, follow us at AskSlim. Again, any questions you have, write to Matt@AskSlim.com. All right, so the stock market this week rebounded after last week's big loss. It was down around 6% in about the last 3 weeks. It was a really choppy week as earnings reports pulled the market participants around by the nose. We saw the mega caps. They really moved, several of them in giant ways. And investors, they came in the week ready to buy as we saw the market strong on Monday. That was after quite a big drop that we saw on the previous Friday. So there was some bottom picking that was coming in. On Wednesday is when basically the upsurge that we were seeing stopped. Uh, Tesla had a big miss, and it was a buy the news reaction. So Tesla absolutely soared on the week, 18%. But that surge on that news pretty much made the highs for the week on that buy the news reaction. It was after a 50% decline in Tesla in just the recent months. So that was a good reason to start buying it. And they laid out their recovery plan, which included lower priced cars. You can't really have a recovery selling cars for less and margins down. And that's really what the situation is for them. Though they had a 21-point program that they laid out why the company has a lot in their docket going forward. I actually think that Tesla's got a shot at a rally here to about 186 or so, but then I think it's headed back to under 140, maybe 130, or maybe lower than that. Thursday, Meta was down 11%, and that was they beat on earnings, and everybody expected that kind of results would bring a rally in the stock market, but it brought a very big drop. And the reason is because their AI adoption is expensive, and I talked about the fact that I thought Meta was just vastly overpriced, and that integrating AI was going to cost them a lot of money. And that's really what their problem is and their problem going forward. And though we may see Meta make an intermediate bottom here pretty soon based on our work, I think we might have seen the highs for the year in Meta, and that a rally back will be a good selling opportunity. It's just that, there is a lot of competition in AI, and everybody's bringing it on board. And the fact that it's going to drive a lot of people to Meta, and they're going to somehow capitalize that into some monetization, well, I think that's far-fetched. And we're going to end up seeing Meta have a lot of disappointment moving forward. Anyway, on that day, as Meta moved down pretty sharply, the S&P 500 was down 85 points in the opening. It was really ugly. And then it came back all day. And it only ended up with a small loss on the day. So that just shows you that the buyers are there. Friday, proof came that companies that supply AI are the big winners. We saw that in Microsoft, which was up about 2.7% on the day on their earnings beat. And Alphabet just absolutely soared as Azure is doing fantastic. Stock was up more than 10% on the day. They beat on earnings. They brought a buyback. They increased a buyback. And they're adding their first dividend. So that's a real vote of confidence. And the stock moved to an all-time high. Google now at an all-time high. And you can see very clearly that companies that furnish the AI integration versus those that are trying to buy that and to get their sites up to snuff on that, they're really very different situations. And that's why we've seen NVIDIA do what it's done. And now with the cloud services, AI cloud services, that's what we're seeing with Microsoft and Alphabet. And they're liable to keep doing well in this market for a while. So our analysis for the stock market showed a corrective period that was likely in April and May, potentially into early June. The bounce this week came right on time. That's a minor cycle that we were looking at for a rebound. However, the odds are pretty high that it's going to fail and that we're going to see the indexes head lower again. That probably will last maybe another few weeks, and I'm going to show you that towards the end of this show. Still, it's a bull market. And when I say that, a cyclical bull market, I don't think the high, and I haven't thought the highs are going to be made until sometime late this year or early next year. And this decline so far, only 6%, is pretty modest. We didn't expect it to be significant, and maybe it'll end up around 8%, which was our next target to the downside. I'll show you that. I'll show you the targets coming up and when and where I think it's going to rebound to in the intermediate or longer term. For the week, stock indexes really strong. S&Ps, NASDAQ, Russell, they're up 2.5 to 3.5%. The Dow was a laggard, and some of those Dow stocks did poorly on earnings, and that's only up about 0.75% on the week. Bond market, 30s down small, 10-year yields up about 4 basis points. Gold down about $52. It is in a corrective phase, we believe, and we talked about that it could last over the next month. And silver down $1.06. But overall, I like the silver pattern better now. And I think it's going to have another pretty sharp move to the upside. And if you look at copper, I mean, it's incredibly strong. And copper is what they call Dr. Copper, leading the way. And often when you get that kind of a move, silver is going to be right with it. So there could be a pretty good silver move going forward. I'm going to show you a little bit more about gold and silver in our next segment coming up. The dollar, it was a small losing week, and I think it's going to be chopping down and maybe get down to about 104 by sometime in June. Nothing big in either direction I see there. And oil up about $1.60. And I think it is topped and probably topped for the year. And I think the first wave down is going to take it down into June. Remember that you can get all of our analysis on all of the commodities, all of the futures that we look at, the indexes, by watching the FutureSpeak show. Arvi does a brilliant job on presenting that, and that is every single Wednesday that comes out. And you've got to be a level 2, 3, or 4 member to see that. So please do consider that, and you'll be able to see Arvi's tremendous work that he does in that show every single week. This is trade planning with the SLIM team, from analysis to the trade idea. So what we essentially do is bring you our analysis, and then we then project out using the cycle analysis that we bring. And this is, of course, one of the few analytical styles that you could be using that projects in direction and in price and in time. There are very, very few analytical styles that actually do project out in time. And I think that we really do a great job at that. So I'm going to bring you Hecla. Katie's going to bring SMH. Arvi's going to bring, I have F there, that's wrong. MDY, sorry, that's correct. And Matt is going to bring XLP. So that's the analysis that we have. And I'm going to start it off right now as I bring up the chart here in Newmont. I didn't say Newmont, did I? Well, I want you to see why I'm bringing Newmont, because the way I approach analysis is that I'm always looking at the segments. I'm always looking at stocks or ETFs in a particular segment to help me with my analysis. In the case, I said I'm going to bring Hecla, which is a cheapy silver stock. It's been a lot cheaper in the past, down in the $2 range, and now it's up in the 5-something range. But I wanted to bring this chart first in Newmont. This is cycle analysis, of course, and you can just look back here at these last 4.5 cycles that we're looking at. Remember that cycles are a recurring pattern of energetics in the market. They are essentially created by money flows, and that's what we do, is bring this so you really understand the money flows. When a stock does what Newmont has done here and gets up past that 78.6%, after it's been negative, as you see it's been in here, coming all the way down from 86 all the way down here to $30, after it gets through that 78.6, it tells us that the money flows are changing. If it would get up over that cycle peak right over there, which is somewhere up over 40, near $46, that would really confirm it. Or it might just make a bullish pattern in here and then turn up here out into later in the year. We're not really sure. But what the key thing I'm looking at here in Newmont is this big up week that you see right there. And that came because earnings were a shocker. they were really good, a lot better than expected. And of course, that's because there is leverage in earnings in the especially in the precious metal category, because they have specific mining costs, and those don't really go up when the price of the metal goes up. And we're gold here at all-time highs and silver getting up near the highs we've seen in a while, and that really has helped this company. So I'm really believing that we're going to see a lot of this in all of the mining companies where they overperform. I've made no secret, I've been an investor for the last year in gold and silver and gold stocks and mining stocks, silver stocks, junior silver stocks. I've got quite a bit of all of that because I have believed in what I'm seeing right now. Now, I'm just going to put up SIL right now for you to see also. And SIL is the silver miners. And you can see in here, this cycle right in here, where it already got past that level. And now it's here early in this next rising phase. This is silver right here, and this is the silver miners. And you can see how the silver actually creates a dominant cycle right there. And now the silver miners moving up, and some resistance right up here at past that last high. And you can see that it's stalled right in there, but it's really early in here. It could bounce around in there and then take off again. So this looks really good. Let's take a look at the daily in here. And this is what's really significant, because I'm going to show you Hecla, and you will see that it has a similar pattern. Look at the strength in here. You can see the slim ribbon here positive, giving you momentum resumption signals on the bottom. Look over here where the slim ribbon was negative and the cycle configuration's negative, and getting resumption signals to the downside. So that tells you something. Here you had resumption signals to the downside at the end of the cycle, and it couldn't, the slim ribbon PO couldn't come down. There was a bit of a warning in there, and then it turned positive here. And you can see how the slim ribbon gives you support as it's doing here and here. And maybe there's another few days to the downside here before it takes off. So this is the silver miners that are in just a super condition right in here. So I wanted to show you that. Newmont on the earnings, the silver miners in fantastic condition, the cyclical movement that is phenomenally good when you look at those. And now let's take a look at Hecla as we look at it on the weekly and on the daily. So here's your weekly on the left. Here's your daily on the right, and you can see in here as Hecla has come up from roughly $3 to almost double here, getting close to $6, and then pulling back here close to $5. I'm just going to maximize that for you to see. And you can see in here the supports where it's getting down to the support. It's really unlikely that it's going to get much under the $5 level here on the weekly chart, and this is likely to be pushing up again with an upside target here of 6.25 to potentially up around $7. So that would be a pretty significant gain. Remember, the daily chart I showed you on the miners was super positive. I said maybe a few more days down. Here's the Hecla chart on that. And you can see on here, as I look at this chart, this is projecting up to that 6.25 to $7 area right there. If I'm right about this being the support area right around $5, if it gets the 6.25, it's a 24% gain here and out into June is where I'm projecting that. If it gets up to that $7, it's a 38% gain. So I'm projecting a gain from the trough that's getting ready to form in here of up to 6.25 to $7, up to a 24 to 38% potential profit. Now, it would have to ruin this. It would have to come down, make the low, have a rally in here, not get very far, and then come down and take out that low that it made. I mean, that's really a long shot based on everything that I showed you here. Earnings right over here on May 9th, as you can see. And that could be what actually makes this low or causes the upside spike. So we don't really know. I think if it misses on earnings and comes down, it's a screaming buy. I think on earnings, it just might spike to the upside and give you that upside move. So I wanted to bring you the depth of the analysis, as many of us or all of us do, is we don't only look at an individual stock, we look at the things in relation to that particular stock that we look at, and then we're able to use the cycle patterns and our other tools for the purpose of understanding market conditions and projecting. That's what I have on Hecla, and actually the whole silver category. Take it, Katie.
Okay, let me share my screen. Let me know when you can see SMH.
Got it.
Good to go.
Okay, great. So this is a VanEck Semiconductor ETF with the top 10 holdings noted here as of today. Now here on the weekly chart, we have a number of positively configured cycles since back in the fall of 2022. So positively configured means that the cycle ends higher than where it began. These vertical dotted lines on the chart represent the cycle troughs, and you can compare those to the ideal average cycle lengths that we have shown by the cycle brackets on the bottom. In this case, those cycle brackets are 27 bars in length. This current cycle was obviously very strong and now retracing into the weekly cycle timing window in between these blue vertical dashed lines. So that's the period of time around the ideal cycle trough when we expect a low to form and then move up into the rising phase of the next cycle. Our proprietary momentum indicator on the weekly chart is the reversal scout. It turned negative here shortly after the cycle peak had formed. It is still negative, so we want to see that return to positive to help us confirm that the cycle low is in place, similar to what happened back here, back here, back here, etc. Now, in terms of projections, notice that we have two possibilities shown here. Either the intermediate cycle low was formed last week, right on time, or it will come slightly late around the third week of May. So how do we know that? It is information that we are gleaning from the daily chart. Let's take a look at that. So here on the daily chart, we have an average ideal cycle length of 24 bars. And here is that low from last week. So based on this average cycle length, we expect this current cycle to form a trough out here in the third to fourth week of May. And that is how we came to the conclusion that either this is the intermediate cycle low or it will come around the third to fourth week of May. Now, on our daily charts, we show momentum with the reversal scout, just like on the weekly chart. And we also use the slim ribbon that colors the candles red, green, or gray, depending on the momentum conditions. Note that the reversal scout and the slim ribbon are both still negative, so we want to see momentum turn positive in this time frame as well. In terms of projections here, either this will form a positively configured basing cycle or it will continue to exhibit weakness and retrace back down perhaps to this previous cycle low support, test that low, or maybe even down to the intermediate 50% fib. Now, the slide stated that I was bullish on SMH in this time frame, and that is because there are option strategies that can take advantage of this situation. The strategies do have positive delta and are therefore bullish. However, they have an even greater profit potential if we get this decline, which is a bit counterintuitive. So these types of strategies are the ones I like to employ in this sort of a time frame to get ahead of the move, and then once the low is confirmed, we can layer on additional strategies. Earlier today, I published an options trade idea video for our level 3 and 4 members that goes over these types of strategies. So if you would like to see that, please consider becoming a level 3 or 4 member. And I will hand it off to Arvi.
All right, Katie, thanks so much. Great job on that.
Thanks.
Seeing a lot of semis that are due to bottom. We post these in our chats on Discord, so check out Discord if you haven't. It's a great place to learn. So let's go ahead and hop over to our short-term short idea in the MDY. So I'll share my screen. Okay, so give it a second here to pull up. You should see the weekly cycle analysis and daily cycle analysis for the MDY. We'll go ahead and pull up the weekly chart. And what we're seeing here is that we're coming into a period of risk on the intermediate term where we're getting late in that dominant cycle. You will see late in these cycles, the really clear sort of washout periods that you see in each of these periods that are just visible on the screen, right there, right here, here, and that's where we are right now. Now, it's really important to emphasize what's going on a longer time frame. However, this is a big base in the MDY. So overall, this is a really positive situation here, and this would likely be a flag that is poised for higher prices. So at the core, I am still positive on MDY based on that longer term pattern. But right now, we're in a period of risk here over the next 3 to 8 weeks where we're looking for a move down. There's a 38.2 fib right around 506.37 or so. And that would be reasonable going into this low, which is due 520 to right around 715. If we go ahead and shift over to the daily chart, you will see first a series of bullish right-hand translations where we formed the highs on the right side of each of these cycle brackets, had small pullbacks that led to higher highs. But then you'll see a shift in character where we saw a high that made a new cycle high versus the old high, and then we saw a break of our key low right there, and that turned this cycle bracket down. And that said that there are good odds, therefore, that we would look at this as a bear flag that would be poised to turn back on the downside one more time into this low that is due 523 to right around 611 or so. So in terms of our levels, we have a zone from 531.07 to 536.33. If it moves over on a daily basis, 541.59, this would be marked as a loser. And we are targeting a move down to basically retest this old low, which is also a 61.8 fib at 614.66, and then there's a 78.6 down here at 502.79. So the risk on this idea, which we have now live for level 3 and 4 members, is around $10. We're targeting of a move of right around 16 on the downside. So that's a look there at the short-term short in the MDY, and I'll go ahead and hand this off to you, Matt.
All right, excellent work, Arvi. Great work to the whole Ask Slim team. It's always fun to watch the group do their cycle analysis and then create our trade ideas. All right, I'm going to share my screen. Okay, as Slim mentioned, I am doing my segment on XLP, intermediate time frame outlook. So let's take a look at how the Ask Slim methodology can help answer the core trade planning questions in terms of outlook period. I talked about that. That's going to be a 4 to 6 week is going to be the primary focus. Directional bias, key levels, including reevaluation, target zones, supports, resistances. And then once you complete your sum of the evidence, does that then show that you have a clear tradable edge? You always want to go through that whole process and then determine for yourself if you have that tradable edge. And then you get to a point where you need to define what are those signals that suggest to you that your trade setup is a go. All right, so let's start with the directional bias. So I'm looking at the weekly cycle analysis, the weekly chart here, and I'm going to focus in on this really important low that formed in October of 2023. And we can see that the reversal scout turned positive. So that was the first indication of an important change, potentially of a key low that was forming. And then went on and really put in a series of higher highs over the next several weeks. And it finished this cycle with a right-hand translation. So it configured very positively. And then it came in, and then when it made its low, it was extremely swamped while it had that right-hand translation. And it followed up into that next cycle with a cycle breakout, continuing this positive movement off of that key low, and it really hasn't slowed a whole lot. Now, where are we currently? Currently, we are in the cycle low timing window. So we're right in this period here. However, there's been sufficient price action to suggest that we have a cycle low pending, likely confirmed in here. I'd like to see the reversal scout turn back up to confirm that is the case. So this is what is driving the overall intermediate time frame bullish bias, is the fact that we have this positive cycle structure that's in place right now, and we have a likely cycle low that is in place, and we are in a early rising phase into this next cycle. So now what I'm going to do is I'm going to also pull over the daily chart, do a little bit of multiple time frame analysis here. It's always good to have that additional perspective so key details are not missed. And again, we had that that key low that formed back in October. But now when we're looking at the daily chart here, what's interesting to first point out is that, as I mentioned with multiple time frame analysis, is you can spot the dominance of the longer duration time frame, and that's really important so you don't get caught up in a potential short-term move within the context of a larger, more dominant pattern structure. So the pattern structure again here is positive, but we came into this period of risk, this corrective period, which then caused XLP in on daily chart here to have a cycle breakdown. However, because of the overall dominance of the positive weekly structure, you'd be wanting to pay attention to this being short-lived. And that was just the case where you can see here that in this new daily cycle here, over the last week or 10 days or so, it had really rallied off that low, and it fully repaired that technical damage that was done over that corrective period, as it has pushed through the 78.6 fib, again repairing that negative technical condition. Also, we have the reversal scout that turned up positive and the slim ribbon. So that combination of technical evidence is what's also suggesting that we have established that intermediate low. And really what we'd be looking for now is for the intermediate reversal scout to turn up to suggest that that next leg higher is underway. Now let's look at our key levels in terms of target zones and reevaluations. Although I'm focused on the 4 to 6 week outlook, I am also looking at the daily cycle target zone here. So over the next 2 to 3 weeks, based on this current pattern, we were projecting out to about 76.92 to 77.58. There's a fib confluence up in that area. There is support, a key support zone that runs from 74.69 to 73.66. So we could get a potential pullback, but the first area of support, as Slim was identifying, we always want to look to when something is trending, our slim ribbon. It does a fantastic job of providing support in trending instruments. So we would look there first, and if it got a little deeper, we have a key support zone here. What we don't want to see is it close in the short term below that 61.8 fib, which is here around 74.29. That would require reevaluation of this overall analysis and projection on the daily. Back over onto the weekly, 4 to 6 week outlook, intermediate upside target zone of 78 to 79.40. And then in terms of reevaluations, the first warning would be a break below that 78.6 fib. And then if we broke below the cycle low, that would require a reevaluation of the overall analysis and projections. That is the analysis on XLP. Back to you, Slim. Thank you.
All right, that was amazing. Just great work by the entire team, and I hope that all of our viewers out there get a great sense of the continuity that we have in our analysis. I know it's an art form, and we talk about that all the time, but there's a lot of mechanics to what we do. And the shape of cycle patterns, the relationship between the magnitude of moves and phases and cycles and support and resistance levels is all important to that. And it's really important to spend a lot of time learning this if you really want to adopt this type of analysis. And you can see, I think our team did a great job on that. And I've got more to say in just a moment about how you can adopt this type of analysis into your work. All right, Matt, we're going to show them exactly how they can do that. Take it over for a second, and I'll be right with you.
All right, great. Yeah, I'll be brief here. I just want to reiterate that at Ask Slim, we offer several premium membership options. All of them focus on our technical analysis. We provide very, very thorough technical analysis services focused on the Ask Slim methodology, which brings a combination of cycle analysis, momentum analysis, swing high, swing low analysis, which allows you to be able to be very objective with your trade planning approach, which is what we just showed you in that prior segment. We're very focused on education, also for various trading styles. And we do offer support in an extremely comprehensive service for day traders as well. So we have 4 services related to, let's call it short-term to intermediate swing trading. And then we also have services within these that offer information, education, and technical insights for position traders and very active investors. And then, as I mentioned, we have the day trader service. But today we're focused on a promotion that is, it's, as Slim mentioned, it is the last, going to be the last weekend for it. It is our cycle analysis workshop. The cycle analysis workshop really only goes on sale once or twice a year. And it's a one-of-a-kind workshop that Slim put together. And it is extremely foundational and instructional with coverage of technical analysis, trade planning, and trader psychology. But the key thing is that Slim goes through and unpacks in extremely granular detail our Ask Slim methodology. So you're going to get to see that done by Slim, I think, and Slim's going to go into some detail here in just a second, but over 15, 16, close to 20 hours or more of video presented by Slim himself. So it is extremely thorough. It lays the foundation for everything that we do. And at this time, we have a special that is ending this Sunday. All right, Slim, back to you to give us some more information on it.
Sure. All right, so it was back right around 1975 that I was introduced to the book, The Profit Magic of Stock Transaction Timing, by who was the drummer in my rock band in high school. And that he had moved to California. I was out visiting him. His father liked to trade stocks, and he said, "You got to read this book." So I read it, and I said, "Wow, this really has something to it." And then since that time, our work has evolved from those core teachings from J.M. Hurst. And that was really the beginning of things for me. I actually did a workshop on this live way back in 1978, where my clearinghouse that I was trading on the floor said, "Hey, why don't you come and teach what you're doing over to our traders in San Francisco?" So that was the first time I ever really taught cycle analysis. And then I decided to do the workshop so that I could teach it to our viewers. And it took me a long time. It was a couple of years to write it and over 6 months to produce. And there's the book, Profit Magic of Stock Transaction Timing. That has been out of print for decades. They redid a special version of that. It's blue. Back about 30-something years ago, one time that was offered. So it's very hard to acquire these books. I constantly go into Amazon and some of the other sites to see if I can grab a book for a reasonable price. And right now, I think that the lowest prices are around $70, $80 for a decent copy, and I've seen them as high as 400s. So they're kind of hard to come by. I have accumulated enough for this particular special that we're doing, and we're almost out of them. So hurry up. The first 15 are going to get a collector's book. So 24 video modules, you get lifetime access to this, and you don't need a special platform. You can watch it as many times as you like. I just got an email from somebody that told me they're on the 4th time through the workshop. And this is going to improve your understanding of the market, directional decisions, and be able to project out in price and in time. And though I'm going to do a new video in June. That will be the next update to this, and that will be using intraday cycles for short-term swing trading. So that'll be coming out sometime later in June. And this is a $400 discount in this special that we do only once or twice a year, and an extra $100 discount if you're a level 4 member. So if you want to upgrade to level 4, you'll get the extra $100. This is normally $1,297. But special $400 discount, $897, or level 4 members at $797. So this is just an amazing way for you to learn the work that we do. I go through all of the different nuances that I possibly can in these videos. I teach all of Hurst's teachings in there. And you will just be astounded at the amount of learning that you do. You're never going to look at charts the same way as you did before if you do decide to invest in this workshop. Actually, for what you get in here, I mean, it is not a big price. For some people that are just starting out trading, I know $900 is a lot of money for you, but this is an investment that I think is really going to pay back if you do spend the time to learn it and apply it. So Cycle Analysis Workshop Special, this is the final weekend for this. So don't miss this great opportunity. Be one of those few that still get a book. So hurry up and sign up for this special. All right, we're in our Q&A right now. So we're going to answer questions that are on here. This is a surprising time. There are no questions on commodities, and that means I'm going to turn it over to Katie and Arvi to handle this segment. I just want to read one on here that's a great comment. It says, Slim, I just wanted to let you know that Arvi has done some fantastic work in office hours and future speak in the last few weeks, and a big thank you to Arvi. We know that, and thank you for bringing that. Arvi is just beyond phenomenal. So really a great comment in there. I think there was one other question that I wanted to look at. Jay is asking, he said he purchased the Cycle Analysis Workshop last month. He's wondering if there are any books from the special left over for early buyers. Write to team@AskSlim.com with that question. I'm not exactly sure how many we have left. I've got a few in my inventory here, so for some spillover if there are extra people. So write team@AskSlim.com with that question, Jay, and we'll be able to answer that for you. All right, I'm going to turn this over to Katie and Arvi.
All right, beautiful. Thanks, Slim. Let's go ahead and jump over to a couple symbols. I'm going to do 3 of them, then hand it off to Katie. We're first going to look at the XBI, so we'll share our screen. XBI has just been in a really clear corrective period on the intermediate term. Very nice action on the downside and still really trending down. So let's pull this up and we'll pull up the weekly chart. So on the XBI, what's really interesting about this pattern is that strong sell that has happened, and you're just seeing a series of lower highs and lower lows on a weekly basis, and that really doesn't look done yet. There's a low that is due 429 to 610. We do have this on the radar for a short side trade idea on really any little bounce that we get over the next few days. We're going to be looking on the short side for a move back down. There's a 61.8 at around 79.25, a 78.6 at around 72.50. So those are our 2 levels down here in the XBI. If we go ahead and shift over to the daily chart, you can see a series of lower highs, lower lows, a shift in that cycle structure that Slim just highlighted, which is so important. A move down, a shift right here when we broke that key low right there on 4-2. And look at the change in character in the XBI as soon as you saw a shift in trend and a change in the cycle structure. That's why it's so important to follow all of this information closely. And you can see from that point, every little uptick back into that falling ribbon has been sold. You can see great signals coming out of here as well, and strong moves on the downside. And you're seeing still a test up, strong move down. If we see another test up, we'll be looking back on the short side for a move down into that next key daily cycle trough, which is due right around the end of May, early part of June, in sync with the broad market. Our levels here are right around 85.50 to 88.28. We would like to see it hold below this minus 78.6 at around 89.90. If we go ahead and shift over to Amazon, so Amazon is really phenomenal action here that's happening in Amazon. Super important to understand what we have on the weekly chart, in my opinion, here is that we have 2 out-of-phase cycles. Okay, we have this dominant cycle right there. I don't know why that's behaving funny. And we have this minor out-of-phase cycle. You can see that this low formed at that minor low right there. We got the rally off that minor low with the dominant still rising. We sold off into that next minor right there. You can see that. Then we turned up again off that minor cycle and then had one more pullback into that dominant low. Move forward. We formed that dominant low, had an out-of-phase minor low. That's this sell perfectly into that low, turned up off that minor low, saw that dominant cycle still rising. So what are we looking at in terms of that cycle structure? This is a bullish right-hand translation, right? So what we're looking at is for a pullback that then likely sets up another move to new highs in the back half of 2024. Now, this pullback right here on that minor low was perfectly timed right there. That's that sell right there, exactly on time. And now we're looking at a little pop that we're getting. Highest probabilities are that we would see one more move down into that dominant trough. That dominant trough or low is due 520 to right around 7.8. And then, as I said, we are looking for a move back to new swing highs and higher, likely in Amazon. This is a very bullish pattern overall on the intermediate term here. If we shift over to the daily chart, you can see that this low, we did slightly shift this out to the right because we saw a strong likelihood of a late low that was forming. That is now clear. We are now back towards that 61.8 fib at 180.94, 78.6 is at 184.72. And we have our next dominant low due again right around end of May, early part of June. This is when we are looking for that key intermediate term bottom to also form here. But in the near term, meaning over the next 1 to 5 sessions, if you see dips, it's reasonable for it to still be bought here and look for it to move back up. Obviously, Amazon does have earnings coming up here on 4:30 in the aftermarket. If we go ahead now and shift over to PLTR, PLTR is quite interesting in that we have a both weekly and daily low that is due here. In PLTR, there's a low that is due 325 to right around 513. This is a higher cycle high versus the old high, higher low versus the old low. It's reasonable to see a test back to the upside and a move up towards that 61.8 and then the 78.6 at least, and that's 2480 to 2598. And the overall target would then be on a move through the 78.6, this old high here at 2750. If we shift over to the daily chart, again, we do have earnings coming up here. So obviously this may form a late low. We don't know. I have shifted this slightly left for the likelihood of a slightly early low here. Again, we have to see this trend turn neutral and then go positive to get confirmation of that. But overall, we are looking for a move up in PLTR towards likely the middle of this zone from 2387 to 2475 here. And then if it wants to test down on earnings, that would be ideal because it would form a let's just call it a washout low here if that happened and then turn up. That would be great, but we'll see what this ends up setting up with. Right now, again, earnings is just way too soon here. We have earnings 5, 6 after hours, so just want to see what happens here, but it is certainly on the radar for a trade idea. And with that, I'll go ahead and hand this off to you, Katie.
Okay, let me share my screen. We're going to look at some of these individual semiconductors first. There's a lot of interest in that. Can you see NVIDIA?
We can.
Okay, great. So you'll notice that this looks very, very similar to SMH. In fact, it is the #1 component in the SMH. So we are in the weekly cycle timing window right now, and this situation is identical to SMH. We either formed the intermediate low here last week, or it will push out slightly slightly longer into the mid to end part of May, and that would line up with earnings. Over here on the daily chart, you can see a little bit clearer. Here is that low that could be the intermediate low. We are moving up now into the upper resistance zone. So we will either form that basing cycle, or this could show weakness and retest that low, or even break down to, let's say, the 50% fib around 683. One member asked a question, how far do we expect that this rally could go? I would project up here, even if this does form a basing cycle, we're expecting that general market weakness, so that even if this doesn't break down or show that weakness, it might weigh on this symbol. And so I would not expect this to be able to make a new high in this cycle as a result of that. So that's a situation in NVIDIA, very similar to SMH. Another question was AMD. This is the 10th component of the SMH. Exactly the same thing. Either that low is in or it's coming in the end of May. This one did get a little bit further down in its retracement so far. The others just hit 38.2. percent fib. This got all the way down to the 61.8. So if we do get a later low, I'd expect either a retest of that or perhaps even as low as 122.24, which is the 78.6% fib. Here's what we're looking at on the daily. We may have that intermediate low in. We'll have to shorten up these cycles a bit, do a little bit of a left shift if that's the case. But we are in the daily cycle timing window right now. We've got earnings 4:30, so that is going to be next week. So we'll see what happens. That might give us a clearer picture of what's happening. Negatively configured cycle here. If we put in some retracement levels, we could, and using this as the low right here, we could expect to get up to 171.22 would be the top of the resistance zone with a 78.6% fib at 178.26. Let's see, another one that I was going to look at was Tesla. Tesla has a large 45 bar dominant cycle that's broken into minor thirds, getting a pop up here on earnings. But we are expecting this minor cycle low out again at the end of May. We have many symbols that are showing troughs that are due in the end of May, early June timeframe. Here is the move up on earnings. We've got a 41 bar dominant cycle here, and we are approaching the middle of this resistance zone that was created using that cycle high and that cycle low. Since we are expecting that trough out in the late May, early June timeframe, we would expect that this area right here would be a good selling opportunity. We'd want to see the lower timeframes return to a negative momentum situation. Deer, someone asked about. We have a large dominant cycle on this one as well, 42 bars with a trough due on the first minor third cycle out in the beginning of June. So a lot of this is lining up. We do have earnings on 5/16. So momentum is positive, but the reversal scout is starting to curl over. So we would expect some weakness going out into that time frame. Here's the daily cycle. This did get down to the 50% fib, and because we are expecting that weakness, we would not project a new cycle high to form. Possibly up here to around just over $400 would be the resistance zone for that symbol as well. Of course, anything can happen on earnings, so we don't know if that will take it down or give it a boost back up. And my last symbol is XLRE. This is similar to the home builders. U.S. real estate ETF, we have a weekly cycle timing window coming up 5/13 to 6/21. So again, May to June timeframe, we've got negative momentum. This is getting a little bit of a bounce this week, but we would expect rallies to fail and turn back down out into this timeframe. We've got the 61.8% fib down around the $35 mark. If it gets below that, we would have to put in the 78.6% fib. Looks like this might have made a little bit of an early low, although we still are in this daily cycle timing window. We've got negative momentum still, but the reversal scout is turning up. As I said, we would expect rallies to fail, so I have this resistance zone, 3807 on the top, down 3712 would be a good shorting opportunity there. And I'll turn it back over to you.
All right, just absolutely great work. There's a number of questions we didn't have time to get to, so I'm sorry if we did not get to your questions. Some of them came in pretty late, so that's why we tell our members to put your questions in early, and then we'll be able to get to them. So thank you all that attended and participated, and we're ready to move on. This is the stock market analysis that, well, I bring about 3 times a month now. We do these shows about 3 times a month, and we're live a couple times a month. So I always bring this particular slide because it's so important. It's very important for you to read this, and that says what our approach is to the market and about how you use the information that we share, and always the important aspect of trade ownership. You have to own your own trades. I actually have a video that I did on that that is in our video library, so you might want to watch that, level 2, 3, and 4. And this is the stock market analysis, multiple time frame analysis and projections on the S&P 500 and the NASDAQ, weekly and daily. Plus, I'm going to bring the MCM to you, and we'll take a look at that market condition monitor, which is a phenomenal application and really helps with the analysis. So let's take a look now as we switch over and look at the stock market. This is the S&P 500, SPX. What's on here is our 13 and 34 week moving average, which are key moving averages that I like to use on a weekly chart, and our reversal scout, which is right in here, which really gives you a sense for momentum conditions. It's always important to see when momentum turns up and when momentum turns down. Yes, my cycle analysis is not on here because this is the way a lot of people look at charts, but then don't really have the greatest handle on the energetics in the market, on important levels, on important timing, on seeing the action of the money flows as how money comes in and out of the market in a meaningful way. That's really what's important, is that there's meaning behind them. It flows in and out. And I'm going to just switch over here and show you my cycle analysis as it pops out at you. And you can see the kind of work that we do. I showed you the empty canvas and then bringing in this art form of cycle analysis that gives us this great handle on the market conditions. There's something on this chart that I added for this particular illustration that I think is important. And I'm going to show you this on the daily chart also. Right over here, you can see the last 6 weekly cycles. And when I say that, I'm looking at the dominant cycle. So that's 1, 2, 3, 4. We're looking back at 4. There's a 5th one peeking out back over here. Had a false rally in conditions of negative momentum, and then a sharp drop to complete the trough. Now, you've seen the commentary that we've had in here from all of us showing you that the conditions in a lot of the stocks and indexes that we look at are that they are very near bottoming phases, or they're already in the bottoming phases. Bottoms are normally made because investors get frustrated. We go into some sort of a correction, the market pulls back, and then it has some kind of a bounce, and then all of a sudden the market starts moving down again, and then they realize, uh-oh, this decline's not over, and they start selling, and then you get to a lower low. And you get sometimes into a capitulation stage where the selling is very aggressive before you actually make that bottom. This notation that I put in here is speaking to that. And if you look right over here at this dominant cycle, what happened was it got down to the support. You had about a 2-week rally or 2.5-week rally where it came up pretty significantly, and then they just bailed out of them for a couple of weeks. And that's that kind of capitulation stage that makes the bottom. And you can see in here the minor cycle, the dominant cycle coming down at that time. And it made that 10.9% low last October, which was a bullseye for us timing wise. That's when we expected that low to come. And then the momentum turned back up. And then, well, we knew we were in the next rising phase. Look at this cycle right over here. It had about just over a week rally right over there, and then the capitulation stage. They sold them very hard right over there to end down 9.4% in that correction. So you can see this rally over here and this rally over here failed. This was a very negative cycle right over here where you had 2 negative configured cycles. These are positive. And you could see it tried to rally right over here. It had a pretty good upside spike for over a week, week and a half. And then it was 3 or 4 weeks of hard sell right over there, which is typical of a negative cycle that you see right over there. Look at this one over here. You could look at this rally, or you could look at this last one right over here, and then it sold down hard again and tested the low. I'm going to keep going back in here, and you can see that this one did the same thing in a positive cycle. It rallied up and then had that hard sell for a couple of weeks. That's how these bottoms are made, because investors give up. And that's what we're looking at right in here as I zoom in, for this rally right over here to be premature. Though we are in the bottoming phase, I thought that we would get, at least a 5.3% decline. I said that when the market was way up here. And we got about 6% in that decline right over there. And I said that it's possible that you get down 8%. And even last week, I said that's really the greatest likelihood that we get down there, with much less of a likelihood that you get down here. So these levels right over here that it made a low was around 49.51. This level right over here at the 8% decline on that monthly support is 48.37. And this decline over here, which would be about 11%, is 46.84. So those are the levels on the downside. Now, when I look at the daily chart, now remember, this momentum is coming down. So when momentum is coming down on the intermediate, there's a hard force of intermediate or longer term holders that are selling. This rally in here is against this momentum right here on the downside, just as this one was right over here, just as this one was right over here. And you can see that that's important to look at, because when I look at this daily chart right over here, you can see you had a continuous upside movement, the slim ribbon giving you support, slim ribbon PO giving you the upside resumptions of momentum that work so clearly. And now you could see that momentum turned negative over here. You're getting up into the top of the slim ribbon, up to the 50% retracement level of this decline right over here. And this is the sell zone right over here. Our compound, it's kind of a double channel cycle projection that we have in here, shows you, well, if it was weak, it would be in the lower part. If it was a little stronger, it would be in the upper part. And that has the upside projection up over here at the top of it of around 51.46. This level right over here is around 51.10, which is where we are right now. So the market could stop its advance right now, but there's a reason that I have that it might last longer, and that's in the VIX. And I'm just going to switch over to the VIX really quickly here on the daily chart, which RV very astutely said that there's a little shorter cycle right over here that we're looking at. And we're reviewing that 34-bar cycle. And that has about another week before that makes the bottom. And this one over here would be, if that was the dominant, would be about 2 weeks away. So what that says to me, looking at these VIX cycles, which are fantastic, is that the rally has a little more time to go. And then likely you're going to get above this 21 level, 22, 23, 24. We don't know. In a capitulation stage, it could get much higher, even well into the 30s. So we're looking at the potential for the stock market to continue up, because the VIX looks like it's going to continue down for another week or a little bit more. So let's go back to the S&P 500 here, and you could see that uptrend that we had and the upside momentum, the establishing of the negative cycle right in here, because this ended lower than it began, the rally up into the slim ribbon, into the resistance zone, and somewhere here between this area of 51.10 and 51.46 is where would I expect this to stop and then curl over. And then, as you can see, this is the declining phase out over here in that capitulation stage. It's not certain that it's going to do this. It's far from certain. But what it is the highest probability. And that this period right over here will be giving you, and I'm going to go look at the side by side here so that you can understand that momentum is down here on the weekly. The declining phase is likely not done. So you have 1 cycle, 2 cycles still pushing down, momentum pushing down, 3 cycles and 4 cycles pushing down. This is 2 weeks of what could be a very hard sell-off in there. You know, maybe it plays up here, comes down and tests this low, and it's a 6% decline, and that's all of it. There's a potential that that's going to happen. The higher potential is that it's going to come up here and fail, and there's going to be a hard sell, just like there was in the last 6 cycles that I showed you on the weekly chart. This is that rally that has a high likelihood of failing, and then again moving to the downside. Everything is probabilistic. I don't say anything is certain. None of our teams say that at all. And we don't use extreme language like crash or melt up or any of those. We bring you whatever the probabilities are and show those to you so that you can use them to your best advantage and understand what is going on in the market. So now that I've brought you those charts, what I want you to see is our market condition monitor, because this is really important. So right now I have this market condition monitor set on short term. So this is available to level 3 and 4 members. And there's an upgrade coming soon that you're just absolutely going to love. So if you look here, you can see on the short term, you have three of them as neutral. Now, these were negative, but they have recently turned up here on the 23rd. And today you had the IWM go neutral on the short term. So these are neutral readings. They were very bearish and now they're neutral. That's because the 2-hour reading on the slim ribbon has now turned green. And the weekly has been green all along. So that has, given you some sense that, it's pretty hard to have a big, huge downside move when you have these type of conditions right now, but they're likely going to change. And when I go to the intermediate right over here, you could see they're now slightly bearish in here. So you have this rally going on in the market, but they are now slightly bearish. If you want to understand the individuals reversal scout and slim ribbon applications studies that we put on here, right now I'm in the trader version, so you can go to the time frame version right there, and you can see in here that our entire focus list is in here, and you can see right now the reversal scout and the slim ribbon on the 2-hour is positive, and that's what I told you, that's what's making it looking more neutral. If I go to the daily chart right there, you can see that even though the market is rallying, these are still negative. And that's when you get the sense that there could likely be a failure in the market. Let's scroll down our entire focus list here, and you'll be able to see, looking here at the daily time frames for the reversal scout and slim ribbon, which are the most negative coming across, and you can see which ones those are right over here. And then when you start to get some neutral to more positive readings, it'll start to show as I scroll down. And here you can see the positive. Now, the only one that's positive on both so far is corn, as corn is now turning up. CVX is now positive, as you can see. DBA, which is, of course, the commodity markets, which are turning up. So you're getting those positive readings right over there. And I'll keep scrolling down for you to see. I'll try to do it a little bit slower so it's not all that choppy. Oops, keep going down right over here. And now we're going to start to get to some things that are a little more positive. EWU is more positive. Ford's decent. You can see that. That's on the daily chart right there. GDX is mixed, as you can see. On the gold market, and these are really, really valuable to look at. Again, we're looking at the daily conditions of our two primary momentum indicators, and this is so helpful to go down here and to see those. So I wanted you to see that. You can do a search if you want to, just like on Apple, and it'll bring up what the conditions are in Apple when you look at that, or NVIDIA, which everybody likes to look at. Whoops, I have an extra symbol there. And you can see NVIDIA right there. So you can look them up that way. Now that's on the daily. If I go to the weekly, you can see that right there. And there's NVIDIA on the weekly. And there are the indexes there on the weekly. And you can see on the weekly, the slim ribbon is still holding positive, the reversal scout holding negative on the indexes. And that's why we're in this mixed condition right now. If these were both red, I would say the probability of the next wave down being much harder than what I'm projecting right now, which is really just another couple percent on the downside from the low that we already made. So this is really important stuff. Let's go back to the trader version right over here. We'll just look at the condition setups right over here, and you could see, let's say the top 10 that are bullish are very bullish right over there. Of course, Newmont. CVX had great earnings, and that moved up. Goldman Sachs is still very bullish. That's amazing when we look at that. And let's just look here at the bottom 10, the ones that are very bearish. TAN, which is the solar stocks, IBB, Pfizer, XBI, Home Depot, TLT, Boeing is very bearish. And that's a look at the ones that are very bearish, looking at the short-term conditions. And of course, you can look at intermediate, near-term, any of those when you really want. Depends on the style of trader that you are. I like to start in at the short-term because I'm kind of a swing trader and prefer to look at that one first, but I'm always looking at the intermediate and the short term at the same time. So there's your indexes right there. That is a look at our amazing market condition monitor, a level 3 and 4 application that is just so important to have as you do your work. There's that S&P 500 again. Again, we're looking for maybe just a little bit more rally in here, maybe for a week, maybe a little bit more than that, and then getting into this period of a potential sharp decline. That is my presentation on the stock market. I hope that you found it illuminating. I want to remind you that we're just in the final weekend of our cycle analysis workshop special. Get this $400 discount. And if you're a level 4 member, it's a $500 discount. So take advantage of that. If you have any questions, write to matt@askslim.com. And if you want to start learning about the things that we do, just go to our website, askslim.com, and you'll begin to learn from our team of pros who really have an amazing understanding of the market. So go around, look around, see our education and analysis for traders and investors. And team, fantastic job. What do you got to say?
Absolutely. Always fun to see our team at work. Great work for all. Slim, great analysis there. Great presentation of the MCM. A lot of fun.
Great job, everybody. We'll see you in a couple of weeks, and stay safe out there, as Slim always says, right?
Have a great weekend.
Right. All right. Thanks, everybody. See you in a couple of weeks.